Hello, everybody. Our lecture this afternoon is regarding understanding the accounting equation as it relates to recording business transactions. As we know, the accounting equation is as follows: assets equals liabilities plus owner's equity. Your assets refer to what you own. What does the business own? They own cash, accounts receivable, land, building, office supplies, etc. Liabilities that represent what the business owes. For instance, accounts payable. These are suppliers who we buy from on account. Notes payable, mortgage payable. These are examples of liabilities of the business. And the owner's equity is what the business is worth. Initially, the owner's equity is the business's capital, and then to that, you add the nature of your business to begin with. That's why you are in business. To that, we will add the revenues. And of course, in every dollar that the business makes in operating its business, it incurs expenses. And these amounts need to be subtracted from the revenues that the business earns. So, this is what makes up your owner's equity. I will talk you through the recording process using the accounting equation by giving you an example of a company that together we will follow along. So here is a company that just opened up. It started, and the name of the company is Unique Designs. The owner is Mary Smith, and the business type is sole proprietorship. So let's go through the transactions of Unique Designs for the month of July. On July 1st, Mary Smith invested $30,000 of cash into the business. So the business now owns $30,000, and Mary's capital into the business is $30,000. You need to keep track of what type of an asset the business now has. We all agree that now the business has what type of an asset? It's cash for $30,000, and it's equal to the liabilities that are now zero at this point, and the capital of the business, which is by Mary Smith of $30,000. Moving along. On July 3, the business purchased office equipment and furniture for the use of the office and paid for it in cash. So now look at what happened. Your cash decreased by $7,500. The cash now is just $22,500, but the company now has another asset in the type of what? Office equipment for $7,500. Looking at your equation again from left to right, just to reiterate, your total assets are still $30,000, and your owner's equity remain at $30,000. Next, on July 8th, Unique Designs received $12,500 from a customer for the services that the company provided. This is terrific. That means that the company earned revenue, which is why it is in business. It's in business to make money, and it did. So the revenue that we have to record is $12,500, which we received in cash. So our cash now went up by $12,500 on July 8th. Watch the balances. Now the balance of cash went up to $35,000. The office equipment remained the same at $7,500. And now on our owner's equity side, we have the capital of $30,000 and the revenue of $12,500. So the business obviously is in full swing, which is terrific. Now what happened next? On July 10, the business paid rent for its office space to ABC Realty for $1,500 in cash. So what impact does this have on our accounting equation? Take a look at your cash in the asset column. The cash went down or was reduced by $1,500, making the cash total to be $33,500. The office equipment is still the same. And now on the other side, part of owner's equity, we have to what? Record also the expenses. Now remember, expenses reduce the revenue. Obviously, for every dollar we make, as I mentioned earlier, there are expenses associated with it, and this is one of them. So we need to then take the revenues of 12,500 and subtract the expenses from that, add that to your owner's equity, and you will see that your amounts will remain the same from the assets being equal to your liabilities and owner's equity. I have one more transaction. On July 15, Unique Designs purchased supplies for $3,250 on account. So what happens here is that we now have another type of an asset. So take a look at our assets section. Our assets section is now with a new addition, supplies of $32.50. But wait a minute. Take a look at your liabilities and owner's equity. We are now acknowledging that there is accounts payable, which is a liability. So now that column, as you can see, has been added. And if you add across the liabilities, the capital, the revenues, and subtract the expenses, once again, the total of the liabilities and owner's equity is equal to the assets. If the month was to end at this point, if there were no other transactions to be recorded, the ending balances as we see at the bottom of the screen are the balances now that we are going to use to prepare our financial statements. So there you have it. That is how accounting equation works, and that is how you properly classify and record the various business transactions that take place. And no matter what the transaction is, no matter what the business transaction is, remember that it would fall under one of the following categories: assets, liabilities, or under the owner's equity, it could be a capital investment or withdrawal, or the revenues of the business minus its expenses. I hope you enjoyed this presentation. If you have any questions, feel free to email me anytime. Take care and have a good afternoon.